All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. We're dealing with a market that has a little bit of strength here this morning. Let's go take a look at a few trades and talk challenge here. Yesterday we got into Bank of America. I was asked in an email about getting into it with the earnings and why I would do that. Typically that's not one of the things that we tend to do. We've done it several times over the years, but one of the things with Bank of America I want you to kind of think about here in regards, this is something where if we didn't have at least some small gains on the challenge, it would have been tough to do. This is the type of play that with some gains, that building gains in the challenge that we're able to do more often, and they often can give us some really nice big shots in the arm as far as account value boost and stuff. The way we structure Bank of America was relatively conservative around the earnings, but this really just came down to the price action yesterday supporting what we saw in the JP Morgan and the Wells Fargo earnings. We weren't necessarily looking at JP Morgan and Wells Fargo stock and saying, well, these stocks are up or down and that bodes well for Bank of America. No, it was the actual earnings and talking about the consumer and business loans. The way that JP Morgan and Wells Fargo talked about those key issues, which have been key issues for Bank of America, was very positive, and so that kind of boded well here for Bank of America. Look, the earnings report for Bank of America extremely strong. To see Bank of America push up into the $18 to $19 level just from a fundamental standpoint is very likely here. And so we will continue to hold it here. We do have cash available to get into one more trade here, okay? And we will definitely look at putting that in play. I want to show you some of the things that I'm watching to put in. Let's talk to Tesoro. We talked to Tesoro yesterday, the day before the breakdown. Let me map this here or zoom in here. So we have Tesoro here on this consolidation. It breaks, and it's been pretty ugly ever since. A heavy sell pressure on it, and this becomes a technical move. In many ways here with Tesoro. Is it bearish? Well, yeah. If you're in call options, it hurts. If you're looking to be a buyer, okay, like I am here with Tesoro, okay, there's a couple things worth looking at. Okay, a couple things worth looking at. Overall, what's it look like relative to overbought, oversold conditions with something like a commodity channel index, a CCI? Okay, and one of the things that Tesoro did yesterday, or excuse me, on Monday, is the CCI went to minus 200, which tends to be very bullish for some sort of bounce. We got a little bit of a bounce yesterday morning, but never held. That says, hey, we may have a little bit more down overall. I would feel more comfortable getting into Tesoro here if we saw the commodity channel index once again return to a significantly oversold state on an hourly chart. What I would expect is for that to correlate to some sort of retracement on Tesoro itself, okay? And here's the daily chart. You'll notice how oversold Tesoro is here with this commodity channel index. This isn't as exciting to me given the fact that, we can go overbought and continue to ride. But it's, okay, where do we look to pick up Tesoro on this pullback? If we retrace the October to December rally, okay, we're still looking down in below the $52 level, and we're still not there. Okay, if we look and just simply retrace the rally that started here in November after this consolidation, we're now coming into the retracement area where 52 is kind of the lower retracement zone. And so for me, with Tesoro, I'd be more apt to want to get aggressive and pick it up somewhere in this 52 area if we start to see a bounce in this area. And that would, if we get down in the 52 area, that would likely give a nice little oversold, position on the hourly chart, as well as put us into some of these retracement areas on the daily chart. Okay, but for now, this is very difficult to want to touch. Who was it? Vegas or Max? One of you called it a falling knife. fully agree. You could buy it right now, be the hero, and if it comes back and it could end up at 50 cents here today and have $1.50 reversal. It's Tesoro. It could do that, but stepping in here is kind of a hero trade. Not as easy. Very very difficult to want to do there. Okay. Um, so watching Tesoro, probably not going to get any sort of entry on Tesoro here today for the challenge. Okay, let's take a look at some of the others here. Time Warner, and I know Carl had been talking about this yesterday. I mentioned it yesterday morning. Time Warner Cable. This stock jumped yesterday because of speculation that they were going to have a 145 buyout target. Charter Communications is they're in negotiations. Charter Communications came out today and ripped Time Warner's management. Over the deal, and Time Warner not being as accepting of the deal. And so, this is one of those things where, yeah, 145 could happen, but generally we get a pop on a stock on speculation. It's not the first time, right? This type of speculation came in back here, okay? So, the happenings or the talks. And now it's a question of, okay, where's that price target going to be? Generally, the day after a speculation bounce, you do get a pullback. In fact, we saw that here on Time Warner just a couple months ago, where the next day you got a pullback. I would expect Time Warner to go higher. I'm looking for an entry here on Time Warner. Yesterday into the close, the options were a little pricier than what I wanted. If Time Warner were to be down, 60 cents to $1 today, I'd be a little more apt to go after it from an option standpoint. I agree, JC. It seems like a no-brainer. It really does. When going through the news and everything else, it's almost too much of a no-brainer. Yesterday it was really kind of flip a coin. Bank of America, Time Warner, both had the similar types of fundamentals. One was more earnings, the other was more spec, so we went with the earnings with Bank of America, but love to get into Time Warner Cable. Won't be doing it right here this morning, but this is one where I'd be willing to pull some profits off of Bank of America and put them into Time Warner Cable and play for that 145 level there. Okay. Some of the other stuff here. FCX, Freeport-McMoRan. Freeport-McMoRan we talked about yesterday. Beautiful move higher yesterday as it kind of reversed from going negative and kind of charged up with the market here, pushing back above the 7-day moving average. The risk on something like this, okay, on a chart like this, is this type of action that we saw a couple months ago, where we get that false move above the 7, and now we go for another leg lower for more of an ABC like correction. Okay, now we don't have to do that. Freeport already had an ABC correction through November and December. Now, is this the start of a new bull run where we have wave one? Now we have the retracement, okay, of on this pullback here in 2014, and now we're ready for the next move higher, where it doesn't have to retrace. It'd be very easy to play that with a 36 stop. As long as FCX is above 36, it's pretty comfortable that, hey, it's making that next bull run. It breaks below 36. The probability of something like this happening to the downside is significantly elevated. And so from a risk-reward setup, Freeport starting to make a lot of sense here as far as an entry. I'm very interested in the earnings report of CSX here today. Not that I want to play CSX, but CSX is a railroad. They're going to talk about shipments in coal, steel, and some of the materials and the metals and those things, and generally will speak more to the stock action on Freeport and Nucor and U.S. Steel than it will actually to the railroads. And so that'll be very interesting here this afternoon. I mentioned this morning on chat that I'd like to look at getting into a shipper, okay, a shipping company. Now, this Baltic Dry Index is what is essentially the shipping rates, okay. And let me take off all the indicators on here, okay. Essentially the shipping rates. Okay? on the Baltic Dry Index, and you can look and see what the shipping rates have done recently. And this year. Why have they dropped so much? China data. Okay, softness in some of the Chinese data overall. Okay, so this is a significant pullback in the Baltic Dry Index, almost 30%. Okay, now if we look at dry ships, DRYS. Okay, this has had a nice little pullback back to kind of this support area, back into a retracement. There's a very logical place to bounce. Something like GNK, Genco Shipping as well. Okay, this is one here where, let me annotate this. Okay, let me annotate. So we have this downward move here. We get a high volume surge. Okay, we get a high volume surge off support. And now with the shipping rates falling, we've had a nice little correction here on GNK. Yesterday we get this little star candle, this whatever you want to call it here, this nice little dragonfly candle with the gap up today. This is a very nice kind of morning star type of bullish pattern happening at support, and GNK to me is really in a nice spot as far as especially for a challenge entry overall. So the shippers, one area looking at. Um, Yes, Vegas earnings on FCX on the 21st. You're right. So it gives us some time to play it, right? I mean, FCX, any trade on FCX, really don't want to be in more than a couple days typically, but that definitely is a consideration. And any of these trades, looking at, not only do we have to pay attention to when their earnings are, but when their competitors' earnings are, right? Because when if we're talking about being into Goldman Sachs, well, Morgan Stanley's earnings are going to affect it. You're talking about being into Nucor, U.S. Steel's earnings are going to affect it. Okay, so any of these, there is an earnings element that we have to account for. Deb, you chickened out on Bank of America? Okay. All right. Yep. Nice job. Nice job. Yeah, we're still holding. There's no reason for us to sell Bank of America here. Fundamentally, this is something that really can easily trade in the 18-19 level. One of the things, and I guess I'm getting off topic here, but take a look at Wells Fargo. Okay, and I want you to look here at the book value here, the book value per share. Okay, and $28. The book value theoretically is what the stock would be worth if the company just closed its doors and sold off all its assets. Okay. Now there's a tangible book value and then there's an actual book value. This is kind of the actual book value at 28. Most stocks will trade above their book value. They will trade 2 or 3 times their book value because they're earnings machines. All right. Well, the financials until recently really haven't been trading above their book values. But last year, we finally saw JP Morgan, we finally saw Wells Fargo, and some of the other smaller banks start to trade above book value. So JP Morgan, book value at 52 almost, now trading at 58. One of the things for Bank of America is Bank of America has not been one of those that has been trading above book value. $20.43 their book value. Management came out and put the book value at $20.70 here this morning. But the earnings are good enough to see a transition where Bank of America, which has been trading below book, can now kind of trade back above book value. And that's why Bank of America really isn't much of a technical trade. Okay, this isn't one that, really kind of running with the 7 and different things like that. This is really a fundamental trade. And Deb, I cannot argue you taking profits. I would not argue with anybody taking profits here because it's difficult with Bank of America. If Bank of America starts pulling back, where do you get out? Okay, this is a fundamental move. Where do you get out? At 1730, 1720, 1710, 17? And that's one of the things that we kind of have to ask ourselves overall. Okay. All right, let's take a look here. Jimmy, Boeing. Why not Boeing? Yeah, why not Boeing? Okay, Boeing is, it's on my list. When it was hit 139 yesterday, I'm looking at it and almost pulled the trigger. I didn't. Boeing, those of you who've been with us for a while, you remember back here in July, this big drop on Boeing. We were in some calls on Boeing. They were doing very well. And, all of a sudden they're on the news. We see pictures of one of their new Dreamliner planes at Heathrow Airport on fire. And the stock just dropped, and it whipsawed back a little and dropped again. Next day popped. It ended up getting a little bit more rally as some of the causes of the fire were determined to be very minimal. Okay, this is kind of what happened with Boeing yesterday. A battery in one of their planes in Japan caught on fire. It's why we saw Boeing go from almost 142 down to 138. It was about a $4 sell-off on that news. Whipsawed back, rebounded back. I went through all that news yesterday, and I read through more than I probably ever want. And really, what I took from it is we could probably get into Boeing here and be okay, but I'm worried that Boeing really isn't going to move very much ahead of earnings until there's some sort of catalyst for it. I think this news could just drag it to go flat or consolidate for a week or so, and that's kind of my little bit of reluctance here overall with Boeing. Am I bullish? Absolutely. Do I think Boeing goes higher? Absolutely. I think this year, if we see the markets charge up into the 2000 area, I think it's very realistic to talk about Boeing around 180. So from a long-term investing standpoint, I think this is a very nice buy point. From a short-term options trading standpoint, I'd like to see a little bit more consolidation or a breakout above yesterday's high. If it pushes above 142 and says, hey, you know what, we're putting that battery issue behind us, okay, fine. Okay, fine. Okay, so as far as things looking for from an entry standpoint for the challenge, I've showed you a couple here. Another one is Vegas Sands, and this is one that I had written on my notes last night that Vegas Sands is a buy on a gap up today. I'm watching it this morning on the open, and this is one that really we saw selling pressure come in immediately after the gap up. So what does that tell me? It tells me, okay, just wait. No need to rush in. Can kind of wait midday, closer to near the end of the day. As far as an entry on Vegas Sands, one of the things that would be nice to see is, some of these stocks that had these reversals, their option values, they ticked up a little bit too much yesterday. They'll contract just a little bit on some flat action here today. Okay. Blake, good question. Home Depot, and Home Depot is one that I have on my list for a buy. For the challenge that I'm looking at. And my biggest problem with wanting to be a buyer of Home Depot is the price action and lows. And if I'm going to go get short this group, this Home Depot Lowe's, I'd rather get short Lowe's. Why would I rather get short Lowe's? Look at this gap that breaks the huge uptrend that it's had. Okay, we have this gap action on the earnings. And now we kind of have this rebound rally starting to weaken off of the tops. If I have to short either Home Depot or Lowe's, I'd much rather short Lowe's. Now, Home Depot still has very bullish patterns, right? Home Depot's earnings were a different story than Lowe's. Okay, and so that's why we're seeing them kind of generally going in different directions. We basically have this little falling flag action going on right now, where let me annotate this. Where for Home Depot, you're in a bullish trend. You look at this last move up, we've just come down to retrace it, okay, and to see some sort of shot higher here on Home Depot, pushing it up into the 85, 86 level, would be very, from a technical standpoint, would not be entirely uncommon. Okay, so I'd much rather short Lowe's than Home Depot. If I'm looking to get long the area, I'd rather get long Home Depot than Lowe's. One of the things that I would do as a fund manager with something like this scenario here, I would go and buy Home Depot, and I would go short Lowe's. Okay, and basically I wouldn't care the overall direction that they went. I'd basically be playing for Home Depot to outperform Lowe's. So I wouldn't have to worry about where the market went, wouldn't have to worry about interest rates, wouldn't have to worry about earnings, wouldn't have to worry about anything except for the relative performance of Home Depot relative to Lowe's. And one way you can chart that is just down here on the indicators. You can come into price and you can say, well, I want to compare Home Depot to Lowe's. So HD colon LOW. Okay. Click on update. And what does it show you? Well, it shows you that Lowe's or Home Depot recently has been outperforming Lowe's. Okay, which is a shift that happened back in the November earnings because Lowe's had been outperforming Home Depot for most of 2013, and now we see that shift where Home Depot outperforming Lowe's. Very, very interesting action there. All right. Also, in regards to entries, Qualcomm. I know Qualcomm's a little sore spot, but Qualcomm trading back above 74 here. We're now the third time pressing this upper band. Good volumes came in yesterday on the downgrade. Good, really tight, narrow bands. Trying to break 74. This is something that has $76 to $78 written all over it, and one that I look at it owes me for the challenge. I'm more than happy to get into that and trade it up. But I would like to, this morning I start watching around 74. I'd like to kind of see it trade up above 74 for at least a few hours because every time it's hit above 74, it's pulled back pretty fast. And so I'd like to see some time above that level there. Okay, just looking at my email, Bank of America, we're not getting out. We're holding Bank of America. I know it's like 8 cents off its highs or something. This is something that could pull back a little bit more here today or whatnot. But this is an earnings kind of a fundamental gap here. I think the earnings are strong enough to warrant this type of action. I don't think it will be nearly this extreme, but Facebook back here in July, the gap up on earnings and a continued run. I think the fundamentals are strong enough here with Bank of America on the earnings to warrant that. Is it going to have some ups and downs and topsy-turvy here overall? Sure, it will. It absolutely will, but we are going to continue to hold that. You're right, Vegas, Verizon, very nice reversal candle yesterday. Some real nice support down in that 47 area. AT&T as well. Okay, AT&T as well. And what's interesting is, we're seeing interest rates actually tick up today, and we're seeing strength come into the AT&Ts and into the Verizons of the world. The one that I'm most interested in this group is Pepsi. And I have to admit that for the challenge, I thought about buying some Pepsi into the close yesterday. And, decided to hold off there just because he wasn't sure if some of these dividend yielding stocks, the AT&T, the Verizons, they hadn't really given much confirmation. Love this price action here on Pepsi, especially on a move today, close above 83. Pepsi is kind of top of the list as far as getting in for the next challenge trade overall. Okay, so those are some of the things I'm looking at. Again, not making any entries into them right here. We'll look midday, later in the day. I tend to like to make the entries then, but these are some of the stocks that I'm kind of eyeing for entries as we go forward. And you'll notice it's a pretty diverse mix of sectors. And what does that speak to? Well, that speaks to the market itself. The market itself here has shaken off anything bearish. There's nothing internally bearish. Yeah, you're going to have stocks that outperform and underperform. You have stocks that go down consistently, stocks that go up consistently. But this is going to be, in my opinion, over the next 4 to 6 months, more of a stock picker's market than a market picking market than we've seen since 2006. I think this will really come down to not necessarily based entirely on technicals. The technicals will matter, but based on a lot of the fundamentals. And who have the strongest fundamentals is where money is going to be put, and those with the weaker fundamentals are going to lag and shift behind. I do believe that this may be one of the most important earnings seasons as far as understanding which stocks are going to move this year and which stocks are not. I think this is probably one of the most important earnings periods that we have had, maybe since kind of September of 2008 when Lehman went under. But that's kind of what I'm expecting here in this market overall, is it to become very much more fundamentally driven. Technicals, bullish technicals will work. Bearish technicals may just kind of continue their 2013 trend, but it really will come down to the fundamentals overall. Okay. Um, yeah, see, Jake, I appreciate that comment. Verizon's your worst loss in 2014. You're moving on, looking for something else. Yeah, Carl laughs at me because he'll talk a stock, and I'll be like, I don't even want to talk that ticker. I hold grudges against stocks, and hey, I guess that's part of trading, right? Um, yeah, Max, there's never any excuses, right? I mean, there's never any excuses in the trading game. So, that's just bottom line. Alrighty, well, so those are some of the things we're looking at. Any questions, please let us know. Carl will show you some more as we go forward. To me, this doesn't come down to bull bear. This just comes down to, hey, look, there are a dozen to 2 dozen really nice setups out there. It's a matter of, okay, which one do we feel most comfortable with from a risk reward standpoint, and pushing onward there with it. All right. Well, thanks for hopping on, and we'll talk to you soon. Take care.